This is Special Focus right here on Equity Access, your daily insight on stock market developments and on developments in the Zimbabwean economy. A beautiful evening it is to you. I'm Ibn Mabunda. Let's roll. On agenda tonight, Afdis, which is a ZSE listed company dealing in spirits as well as the manufacture of wines, today released its financial results for the half year 2019. According to the financials, revenues up 57% to $25.9 million, while profit after tax is also up 157% to $7 million. While the growth in revenue is spurred by a growth in sales volumes, leading the pack is a 61% contribution from spirits in that regard. A caveat in the financials says that the growth or the wider margins in as far as the profits are concerned are a result of the prevailing macroeconomic conditions as well as the market distortions that we have in the economy. Meanwhile, Sibanye, which is listed on the New York Stock Exchange as well as the Johannesburg Stock Exchange, today released a trade update with a hint of a 1 billion rand loss in the period to 31 December 2018. Of note is that Sibanye holds a controlling stake in Mimosa Mines here in Zimbabwe. Of note as well is the fact that there is a restructuring that is to be expected following losses posted by the group over the past few years. Plus, Zimbabwe spends $7 million on importation of dairy products. This is because annual demand for milk in Zimbabwe is 120 million liters. Our current output is 70 million, leaving us with a deficit of 50 million liters. Comparing that with Zambia, Zambia produces over 500 million liters per year. Where is Zimbabwe missing it? For conversation on these and other issues, I'm joined in studio by our very own investment analyst, Anesu Chumbumu. Anesu, good evening and welcome to the show.
Well, thank you, Ibn. How are you doing yourself today?
Splendid. Can't complain. Should only get better.
Well, that's good.
Awesome. Let's cut to the chase. Afdis releases its financial results and revenues up 57%, as well as a growth in profit after tax of 157%. Yes. What were the major drivers of this?
Okay, Afdis is a company that mainly deals with strong beverages. And three of their major lines would be in the ready-to-drink product line, their wines and their spirits. Now, the major driver for their 57% increase in revenue was mainly to do with the 40% increase in their sales volume. Now, within those sales volume, we then noticed that there was a 55% increase in their ready-to-drink product line, okay, which was pretty much of a good driver. But then, in terms of revenue contribution, spirits was still leading for quite some time. It has been their major product that has given much to their revenue numbers. So now, with that being said, we do realize that spirits have a better price margin for them to actually give out such a good contribution towards the revenue, which is about 61% for spirits, and then about 29% for ready-to-drink products, and then the remaining 10% for their wines.
Okay, I'm just looking at their profit after tax growth there. I mean, half year 2015, that's 1.9, half year 2017, that's 1.8, and then all of a sudden we have 7.1. Why is that?
Well, last year they actually had a new product line that came onto the shelves, which was in their spirit section, okay, which is actually a whiskey gold blend black, if you're familiar with it. It came onto the market, and that actually spurred them because it came in with a volume uptick of about 7%. Okay. So, with that being said, it was a good thing for them, even though the volumes for that year in question had actually come off by about 5%. The 7% contribution of the gold blend black was what actually had them have a good rise in their profits.
Okay.
There.
Moving forward, do you think that they will be able to maintain such a growth pattern?
I think it is very, very possible, because from what I noticed from their financials, they're a company that has seemed to try and sail very a little bit more smoother than most companies in this forex challenged economy. Now, there is a component of inflation within their revenue numbers and their profit numbers, but then as we look at their balance sheet, I did notice that there was a change in their creditors structure, where you'd find that the local creditors actually went up by about 60%, almost 60%, and then their foreign creditors came off a little bit by about 35%. Now, this to me gave us a signal where they're actually trying to limit down in terms of their foreign credit. Now, when their foreign credit actually came down, the prepayments or their accruals rather
Right.
actually went up as well. So that for me, I could give an assumption that they are actually prioritizing paying forward on their creditors before they actually handle some of the goods. So that has kept them a little bit above the rest in terms of being able to service the demand. But then also there is also something for us to note, that they actually did commission a ciders plant,
Okay.
where they actually produce some of the ciders that we do partake here in Zimbabwe. Back in about 2014, I think at this time they were still trying to really find out how they can really structure their costing and their pricing,
Okay.
and things were a little bit unstable. There was a little bit of an issue in terms of what you call a currency issues started to really come up around about 2016. This is why you see that decrease from 1.9 to about 1.6, and then the increase started coming back up 2017, where they brought in the gold and black, and going forward it actually started improving better.
Okay. Lastly, before we move on to the next story, there's been the lifting of SI 122, which has allowed the importation of foreign goods. What could that have in terms of effect where their operations are concerned?
What you need to realize that SI 122 actually came in at a good time for them, and also it was towards in favor of them, because like I had mentioned earlier on, that in 2014 they commissioned about two bottling plants for their ciders.
Okay.
So that meant for them importation was now becoming cheaper, and also the cost of doing business for them actually went down, which then put them in a place where they could have very competitive pricing in terms of the products that they do offer to the people. So the ready to drink product line, it was pretty much had a very good pricing. So as time went on, that was very good for them. And then even now with the risk of them actually facing competition from other drinks that could come into the country, they don't have a lot of worries around that area because of that cost that they have managed to take away by putting those two bottling plants that they did in 2014.
Fair enough. As we make progress, let's talk about Sibanye.
Yes.
These guys are the 5th largest platinum producer in the world, as well as the 10th largest gold producer globally.
Mm-hmm.
Now, they are posting losses of 1 billion rand. And this is ahead of their financials, which are due to be released on the 21st of this month.
Okay.
Now, my question is, what is actually happening? Would you mind taking us through the details there?
I think the major challenge currently is the industrial action that has been taking place in South Africa. It's been going on for quite some time, and also commodity prices in the previous year, where they actually recorded about a $4.4 billion loss, billion rands loss. That the commodity prices really had a huge knock on them, and the industrial action that has been taking place. So with industrial action taking place, productivity then really becomes very, very poor, and at low rates. Now these guys have a lot of fixed costs that they have to worry about. They have other costs that they have to worry about. So now, so with those costs coming in versus very poor production, it spells none other than losses coming their way.
Okay, let's talk about the relevance of that to our very own Mimosa here in Zimbabwe.
Okay. They did mention that with the losses that they have been currently incurring, they're now thinking about restructuring. Now, why I'm talking about the restructuring, they do own about 50% of Mimosa, which has about 7.9 million ounce deposit of platinum that they do control down in the south of this country, in your Shabani area. Now, with them having 50% control, there is some speculation, or rather, I would say my own assumptions, where there could be a reduction in their control within Mimosa, and not knowing who is going to be taking part of that 50% ownership that they have. It could spell a positive for Mimosa. It could spell a negative depending on who's going to be owning them. But then now there is also an issue to do with Zimbabweans back in South Africa, who are actually among the mining association of workers, where they could be facing some retrenchment issues, because these guys are really looking to cut down their costs so that they can become profitable again. Yes, they did improve from a 4.4 billion rand loss in the previous year to a 1 billion rand loss. So now they think that probably if they restructure their costs and probably sell off some of their assets, it could spell a positive for them in the coming financial year.
Hold on a second. The restructuring is subject to a vote by the shareholders. Do you think the shareholders are going to give a thumbs up to that?
It's most likely, because shareholders do need a dividend, and with losses happening in the company, that dividend doesn't come. So it wouldn't be very much of a good value for them if they don't vote for a yes on the restructuring.
Okay. Then this one is a worrying story. Zimbabwe spends $7 million per month,
yes,
on imports of dairy products.
Well,
we are coming from a base where in the 90s we were producing 260 million liters of milk. Currently we are producing just 70 million, which means we've actually gone down against a demand of 120 million liters. Can you take us through that?
So you'll find that back in the 90s, progressing to now, which you said we are at about, we are about at 32,000 cattle for our herd. Now, from 192,000 in the 90s to as low as about 7,000 mid 2000s, and then now we're actually recovering from 7,000 to about 10,000. Now we're at 32,000. So this has pretty much affected our production levels. Because for one cow you should be able to milk about 50 liters a day. So from having a herd of about 192,000, it was a good number for us to make about 260 million liters, like you mentioned. Now we're only doing 70 million liters with that herd of about 32,000, and it's still progressing. Now its progression is only mainly because the major players in the dairy market, which are your Dairy Board, your Nestle's, are actually helping out with cattle farming. That has been very, very beneficial to them, because coming from 7,000 to 32,000 is no joke in a couple of years. Also, they have been making sure that they breed better cows by purchasing better quality semen from outside the country, South Africa, Australia, you name it. So with them importing the quality semen, then it gives them a better chance of a very good future in terms of the growth of the market and the supply that the country can actually give.
Okay, let's talk about Zambia. Zambia is a population of 17 million. Zimbabwe is 15 million. But these guys, they are producing over 500 million liters, which is more than 5 times what we're actually producing. And if you look at their farmers, they've grown from just 1,500, now they're over 5,000 farmers that you have in Zambia. What could Zimbabwe do to perhaps enhance our figures as well, and perhaps get to a place where we can actually have those levels of production that meet our demand?
I think like I mentioned that your dairy boards and Nestle's are on the path of doing that, but then we could also also increase the awareness and funding in terms of actually helping new farmers getting into the market where we start building our herd. Because the moment we
Command?
have, but then not just talking about your command dairy farming. We can't really command dairy farming because there are a lot of costs that need to be considered. Your startup costs, your processing costs, and the like, your operational costs. I mean, but then when we talk about startup costs, we have to consider things like the sheds, the parlors,
Right.
your vehicles for transportation, and the like. So now, for you to have a shed for cows to rest and feed, that's another load of money that needs to be invested. And then there's the parlor where you milk the cows, where you're gonna be milking the cows, and when the cows are being milked, that milk needs to get into storage units which are at a certain temperature that have good quality material that it's built from,
Okay.
for pH reasons and quality reasons, because that product is a very, very delicate product.
Right.
So probably we're actually even producing more than 70 million, but by the time we get to your processors, your dairy boards, and the like, there is so much more milk that is lost in transit because of the quality that could have been lost. Now imagine the threat that is there because of the fuel shortages that we've been currently facing.
Right.
Imagine how much more milk is being lost out when farmers are not able to actually deliver the milk that they have to go with. Not just only talking about deliverance of the milk. When I mentioned about the awareness thing, how is Dairy Board, how is Nestle and the other players in the market, are they going to go and give some education and give some awareness to new farmers and the farmers who are already existing? So now the education gap, the intellect gap, then becomes pretty much wider, and then that becomes a very, very huge threat in terms of the quality of the milk that is produced and the amount of milk that can actually be produced. Because if you're expecting 50 liters from a cow on a daily basis, just imagine how much more you could have with larger herds where we are not being able to actually increase that speed on increasing that herd.
Wow, quite elaborate. Now over to you. How did the stocks perform today?
All right, the markets came up on a positive note. A little bit mixed reaction here. We have about a 2.23% and 0.22% increase for the industrial and the all-share index in that respective order, settling at 511.17 points and 153.24 points in the same respective order. Now, the mining's index was very stable today. Not much activity around the stocks in that index, but the top 10 index did come off as about 4 versus 1 counters were going in either direction. Now, cassava was the only counter that went in the positive direction, coming up 0.82% for it to sell at 146.89 cents. It wasn't the best performing counter of the day. TSL was the best performing counter, coming up 20%. I think that has much to do with the revenue increases that we have been seeing of late, the 122% increase in the revenues as of January compared to last year's January sales period. FMP went up 17.19% for it to settle at 7.5 cents. Also came up 4.3%. But the worst performing counter of the day today was Star Africa, dropped about 18.18%, while Edgar's also trailed that performance by coming off 14.93% for it to settle at 12.65 cents. Now, what basically happens has been happening in the stock market currently is that we have been seeing some sort of a net selling position in terms of our foreigners, but then they're selling more to do with the other blue chip companies for them to divest and put their money in Old Mutual. Today, Old Mutual did come off, but then I think that was much to do with the level of number of stocks that were bought today, because the volume of shares actually that were bought today came off about 51% from the previous day, where it had actually performed a little bit better than it did today. But then other than that, for me, even it's pretty much the same currently.
Well, thank you, Anesu. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and visit our website, www.equityaccess.net. From Anesu and I, thank you and good evening.